Welcome back. Well, the Nifty is still holding below that 17,500 odd mark. During the day, periodically, we've made those fight backs, but we're not able to stay above that 17,500 odd mark. Mitesh Chakha is back with us. Mitesh, first, what's your take on the index? I mean, we started off, we were up close to 80, 90 points in the morning. We've come off considerably from higher levels. It appears we're not able to stay above that 17,600 odd mark. How are you reading the index? And also fill us in with a couple of your calls.
A couple of things. One, I think, the market isn't getting into any kind of a positive zone. In fact, what has happened is that with the last few days of decline, the positive indicators which happened after the HDFC Twin announcement, I think have kind of turned sideways. So I'm trying to figure out what level there could be some kind of base building happening. Either 17,500 holds on an hourly closing basis, or if that doesn't happen, then 17,350 400 becomes the preferred lower end of the base. So I think we'll assume that, that can also happen. Therefore, trading with stock specific biases, but around 17,350, 400, I think I would want to see a reversal and attempt along. For the timing, I have a BTSP on ITC with a stop at about levels of 267 for targets of 274. And Jindal Steel and Power, I think that's the one which is, kindly slightly turning negative. So that's the STBT with a stop at 557 for targets of 542.
It's sell today, buy day after day after day after tomorrow. So with the holiday gap, Mitesh, thank you very much for joining us with that with those trading ideas. 52 points lower. So I mean, it's kind of given the sense that there is a move coming either way, mostly on the downside for the last several hours, but that is not materialized. Just holding that 40-50 odd points, that's about it. 17,479 on the Nifty at this point in time. Let's revisit Infosys expectations, which should be out. The numbers should be out in the next couple of hours. Rima is back to tell us what can we expect from the IT major. Rima.
Thanks so much for that. Well, the numbers should be out in about an hour from now at about 4 o'clock, and 4:30 is the press conference. The expectation or the CNBC TV18 poll will also come up for you on your screen. A dollar revenue growth of 2.7%, which means growth rate will be similar to what TCS had reported in the March quarter. Margins will be down about 20 basis points, impacted by the supply side situation, higher visa costs, and EBIT margins for Infosys has always been lower than TCS, and we're working with a figure of 23.3%. FY23 guidance will be very important. This will be the first time the company will give you the annual guidance. On the top line, the street is expecting a 12 to 14% growth number, which will be, similar to what they had started FY22 with. But if you remember, Infosys periodically kept upping the FY22 guidance. They started with 12 to 14%, then they upped it, and finally they're likely to end with 20%. So, and even now, the street believes the 12 to 14% number is going to be conservative because the actual estimates on the street are much higher at anywhere between 16 to 17% type of growth. On the margins, the street expects a 22 to 24% guidance, which is similar to what they had guided in the last year as well. So that's going to be unchanged. But commentary surrounding margins will be very, very crucial because of the street's concerns about the supply side situation, travel costs, facilities opening, the office expenses opening up, which will start hurting the margins. So commentary around margins will be very crucial. And another factor to track will be, will they also see some mega deal wins like TCS did? Because for TCS, the key highlight was the deal wins. Will Infosys also surprise positively on the deal wins? That will be tracked by the analysts very closely. Back to you.
Okay, so that's one big number, Rima, that we'll be tracking. But you're not alone, because in the banking space, well, HDFC Bank, that'll be reporting its numbers on Saturday. Abhishek will be a busy man. He joins in to run us through what do we expect from that one. Abhishek, over to you.
Well, Nigel, street is anticipating on a YOY basis best NII growth in 4 quarters and best profitability or profit growth in last 9 quarters. The business update already is on exchanges, wherein the loan growth momentum on a sequential basis is the best in last 20 quarters. So we need to watch out for the net interest margin, which may remain stable or improve on a sequential basis. Now, slippages or formation of bad loans could be around 4,200 crore as per CLSA. This compares to 4,600 crore in in the previous quarter. Credit cost or NPA provisions to remain stable. Recovery and upgrades will actually help in asset quality improving on a sequential basis. So gross NPA ratio as per ICICI Securities can come down by 9 basis points on a sequential basis. Watch out for the restructured book and how it moves around. It was around 1.37% of the loans in the previous quarter. So our poll suggests NII growth of 14.8% YOY and about 6.5% sequentially. We are working with a profit growth of 26.5% YOY and flat on a quarter-on-quarter basis. Back to you.
Infosys is flat. HDFC Bank is down 2% now. Abhishek, thanks very much for that. Prakash Devan is now joining us. Prakash, Infi, which has sold off quite sharply from just under 1900 levels to 1750 or so, is positioning very short, according to you. And what would you make of it?
Hi, Prashant. So I think, IT started seeing a bit of a sell-off a week back, when we saw the global meltdown kind of percolating into our markets as well. And then every time you have FI exits, the large cap IT it does take it on its chin. And what the TCS number probably have seemed to missed out on doing is firing up, expectations or building up expectations on the positive side for most of the larger players. Though TCS has had a record deal win, a quarter of sorts, it's not something that the street is expecting to be kind of replicated too often. And in the case of Infosys, the market's going into earnings with very low expectation, and that's the upside. That's the potential upside, Prashant. My sense is, even if they clock these numbers, which we just saw Rima run us through in terms of expectations, it's going to be very, very spectacular for Infosys to continue that growth that it has been clocking for the last many quarters. While it could trail TCS on some of the metrics, it doesn't matter. But on an absolute basis, it still offers great value and growth potential. So from that perspective, people will see money coming back into the large cap IT as and when that happens. So it's time to buy when everybody is exiting for a reason other than just fundamentals. And I think the earnings will just go on to corroborate that. So I'm quite positive on the expectations on the stock behavior more than the earnings here on. And let's see, Monday could probably be a day where we could be talking differently once these numbers are out.
Okay, all right. By the way, Prakash, just coming back to you, the markets have moved to the low point of the day. It appears that expiry move is taking place, given that, today we have an early expiry. So you have Tata Motors that's moved lower. You have Eicher Motors as well that's seen a bit of a downtake. The HDFC Twins, remember, they are the big boys. When they move lower, they take the index down with it. And I think Kotak Mahindra Bank as well. You pull up the intraday chart out there. Some of these stocks moving lower as we speak. Prakash, but from the broader markets, some of these paper stocks, they continue to do well. Your JK Paper has been doing well. SSI Paper, I think, let's get the intraday chart out there. That one is up closer around 10% odd. Debt-free company, Capex coming on, Capex is behind them. They've done most of that from internal accruals. And, SSI Paper, in fact, is up closer around 10% odd. What would we look to pick up from here? For this one, I think, capacity is going up by 20-25% odd. Debt-free, the margins have been quite dull